Hey guys, Mike here. So a lot to talk about today, and we're going to talk about stimulus checks. We're going to talk about what, and I'm going to show you a prime example, boost markets quicker than anything else, which is the opposite of what we're in, and it's not earnings, okay? But, first you might have noticed the markets were red this morning when you woke up and stuff again. And so I'm going to basically read exactly what I sent the members this morning, our daily news brief, and then go over something that, it happened once. But if it happens again, then I think we got a big problem. But it kind of is starting to show maybe that there is a shift in retail investors' mentalities, okay? And so this is what I sent the members this morning to why the markets are red. And what happened was there was a report that came out this morning that U.S. consumer spending expanded in the first quarter at the softest pace of the pandemic recovery, marking a surprise sharp downward revision that suggests the economy is on weaker footing than previously thought. That's a real shocker there. Outlays on goods and services rose an annualized 1.8% compared to a 3.1% pace in the previous estimate. According to the Commerce Department, overall gross domestic product was revised down slightly to a 1.6% annualized decline versus the 1.5% they had reported. And this right here shows the shift in dip buyers, okay? You can see right here, this is ETF traders, and obviously during, every dip, 5.5 billion flows in, 42 billion flows in. Down here on another dip, you get around 30 billion, and all of a sudden in June, you get this dip down in May, starts popping in June, you get 10 billion in outflows. And so instead of buying the dip, people said, I'm out of here. And they took it out instead. This does not surprise me. And I'm saying you see it once. I want to see what happens next month and the month after. Because, as we get lower and lower, a lot of times people will just, we're 20, 30% down. It's time to start buying. So we'll see if that's just a phenomenon that happened one time. But I can tell you just listening to members, seeing you guys in the comments, that some people are tapping out. They're like, I'm out of here. They're selling. Some of them are selling everything. Some of them are selling just the growth stocks, keeping everything else, and it's going into cash, or trying to put it into some kind of dividend, more of a defensive play. And you can't blame them. I mean, that's what this kind of market does, especially if it drags out for a long period of time. It just wears people down. And then when you get that wearing down process, as you did in the other bear markets, that's when you get that huge drop, because a lot of people just say, I'm out, right? And then all of a sudden the hedge funds start selling everything and triggering stop losses and everything, and it's just a mess, right? And so, that's where we're at on that. We'll have to keep an eye on it, but, I can't blame people for being worn down, because it does get old if you keep looking at your portfolio and it's red, or you keep, buying all the dips and stuff. And so, and just like I said in another video, and in this article that had this chart, that's what it said. It said, on an uptrend, buying the dip is very profitable. On the downtrend, selling the rip is very profitable, not buying the dip, so to speak. So, anyway, each to their own. But, the key thing, you can look right here, and this is what everybody's waiting on. Why is everybody banking on the Fed to pivot, right? To say no more rate hikes, or they're going to decrease rates and stop rolling off their balance sheet and all this stuff. And it's simply, you see this, what China's doing right now, right? Remember, the stock market is an addict. It's an addict on like free money, cheap money, okay, all that stuff. And that's what you see going on. What is China doing right now? Last month on May 23rd, they said they're going to put about $5 trillion in stimulus in the economy, and, do this through 33 measures, and because they want to reach this 5.5% growth target for the year. And of course, what do you see happening? And this right here is a Chinese internet ETF, and it goes up 33% in less than 36 days. And then you move over here into the Chinese stocks. You got XPeng, boom, it skyrocketed. It was up like 74% in 1 month. Now it's down around 55 after you get this sell-off, because it got way overextended. Then you get NIO, boom, same thing. As soon as it's announced, this thing takes off, goes up 67% after it's already left for dead there. Move over to Alibaba, which is a popular one. And you can see this right here, ends up skyrocketing as well. It's all the same charts. Remember, I can pull up every single one of them, and they all went on these huge rips. But, it goes up 47%, sells back off, and now it's sitting around 40% up in 36 days. And so I wanted you to see that, because if the Fed comes out and says, and most likely the announcement will be, in October, we're going to be done raising rates. That's it, no more rates, right? And then maybe they're going to even stop rolling off the balance sheet. then that's when stocks, because they might be forward thinking, they're just going to take off, right? Because right now with this quantitative tightening, they're taking money out. They start doing quantitative easing. That's what China's doing, right? Then that right there is stimulates stocks faster than anything, and not earnings. Like, that'd be nice, but no, it's that right there. It loves that free money. It loves the low interest, so low interest on these loans. They can raise money for the companies and stuff like that. And so, that is why you see Chinese stocks going up, not because all of a sudden the company's got better and the country's better. But I'll tell you right now, what do you see? The reason why they're doing quantitative easing versus quantitative tightening right now is because, one, they're doing those crazy lockdowns still, but also our housing market is starting to hurt them. I mean, this just came out on Monday. The housing market slowdown is showing up in shipping data from China. And so you see it's got to do with appliances, furniture, building materials. And don't forget to hit that like and subscribe button, guys, if you get something out of this. Because remember, we don't make any of that stuff here, right? I mean, go and look at all your appliances, see where they're from, okay? And so that's where we get a lot of stuff from. And they're starting to see, that ain't good. And in China, what's going on with their housing market? It's been slowing down, right? And that's where 70% of their wealth is tied up in. And so, they're starting to feel, remember, that we're the number one economy, the largest, they're the second largest. So, what do you think happens globally when both the number one, number two economies start to slow down? Probably not good, right? And I don't even know what to think of China, because you got, I think, every central bank around the world, maybe not Japan, maybe Japan's not, but everyone else I can think of is doing quantitative tightening. And here they are saying, we have no inflation problem, we're going to do quantitative easing and everything. It's just amazing to me to see that going on. But another thing I was talking about is I've seen this, and I already know, I can hear the people's comments right now, is what's happening in California, where you're going to have stimulus checks rolling out. And this just came out yesterday, and it says 23 million Californians to get up to 1,050 in stimulus checks. They have about 40 million people in California. And they obviously, depending on how they qualify, can get up to 1,050. That's the max. But it's a $17 billion relief package that was put into place, and will also suspend the state sales tax on diesel fuel, which they need. And, I can hear a lot of people going, oh my God, these liberals are going to run them in the ground. But understand, the reason why they're doing this is, keep two facts in mind, is their gasoline out there is about 29% higher than the national average. And on top of that, you actually have a surplus in their budget. They're not running up debt or anything like our federal government did. They have a $97 billion budget surplus, supposedly, and that's where this money is going to be coming from. And my understanding is it's going to work just like the federal stimulus checks did, where it's like single taxpayers that make $75,000 or less can get the max. Couples making $150,000 or less can get the max. And if you ever lived in California, that is not a lot of money. I was stationed out there. Loved the people down in San Diego. Loved the weather. Couldn't stand the bills, so I left. Came back when I got out because it's way too expensive. I was years ago. I understand it's way more expensive now. And I mean, is this going to help with inflation? I mean, how could it, right? You put $17 billion out in the economy for people to spend, but you know where most of it's going to go? It's going to go towards food and energy. Guess what the Fed has already said multiple times they can't control or have any effect on? Food and energy, And so will there be some people going to spend it on clothes or whatever, vacations? Probably, no doubt. No doubt about it. And, this ain't a political channel, but I'll tell you right now, I'm always for the regular folk, right? And just because the way I grew up, how I live, and guess what? If you're sitting there with a surplus like that, if that's the case, I don't know where it came from, why in the world would you not do that and try to help your people out? Because a lot of people, it's not their fault that their finances are being, put through the ringer because you have a government who has a terrible energy policy, which is an absolute disaster. And then you have a Fed, which has no idea what the hell they're doing, right? And so because of all their mistakes, everybody has to suffer because of that? And if they were running up debt to do it, I would be totally against it. But they're not. And so I don't know where that surplus came from. But, instead of letting it just sit there and them spend it on a highway or something, yeah, I mean, as high as their gas is out there, and remember, people can hate on California all they want, but guess what? If it was its own country, I think it'd be the 5th largest economy in the world. So we ain't functioning in this country without California. Just look at how much they grow as far as, all your food is concerned, everything that comes from California. And so, yeah, got to have California. So it is what it is. And so, you know, hopefully you got something out of that. I mean, you see what's going on in China. Again, I have no idea how they're doing quantitative easing and have no inflation what the whole rest of the world does. Couldn't tell you on that. If you do, let me know. You know, we got to keep an eye on if ETFs, these outflows continue, or it was just a blip on the radar, right? I have no doubt that people are definitely done dip buying. That's for sure, a lot of people. And they are just tapping out, sitting on the sidelines. Because they've kind of starting to lose faith, because that's what these kind of markets do. They wear people down. You know, luckily I'm very stubborn. You know, so I'm like, no, and you just got to have a plan put in place. It is what it is. And, you know, anyway, just want to put that out there to you. Hit the like and subscribe button. If you got anything out of it, hit me in the comments. If you got any questions or if you got any news you want the rest of us to know, and I'll see you later.